By the end of this video, you're going to be able to identify why I say this is a high probability trade and why I called this trade in the signal group on Friday. So let's get right into it. This right here is a high probability trade, and you're about to see now why. You're about to see why now. So as I said, let's get right into it. So I'm actually delete everything. I didn't have pretty much. I'm going to just delete everything. We'll do it from scratch. So I'm going to show you exactly how I had my chart marked up. So let's turn this on and let's replay into this day. So it was literally right here. We're going to break this down right here, what we're working with. So when we come to sit and analyze the market to trade New York, this is the time I come to sit down at 8:30 pretty much. And I'm going to show you guys exactly how I had my graph and why I had it like that. So if we're trading right here, the first thing I do is mark my highs and lows on the M5 time frame, right? So real quick, I'll just do this. We just mark our highs and lows. So this is our high of day right here, which is the highest point of the day between Frankfurt session and New York session. That is one of the key rules to mark these. If you guys aren't too sure about the exact rules, I have a video on my exact rules on how to mark these in the YouTube channel. So you guys should definitely check that out. Now, this is the low of day right here because this is the lowest point between Frankfurt and New York session. So we have our high of day and low of day, one previous trading day than we're trading from. So if we're trading Friday, the high and low of day is coming from Thursday, right? So our previous high and previous low of day is going to be two previous trading days before, which would be Wednesday's price. So this is the high of day right here, the previous high of day, this area right here, previous high of day. And then this is our previous low of day right here, this area right here. So now that we got this marked right here, now the next thing to do is do a top-down analysis. So we're going to work our way up from the work our way down from the H4 all the way down. So let me turn this off. Or actually, I'll go more in detail. So let's actually start from the weekly. So this is key right here, guys. So notice this. Price pretty much on Euro USD, we had this big push to the downside, right? This big push to the downside, leaving voids to get filled. Now price is pulling back, filling those voids. So notice at one point price reacted off of this weekly supply right here. We had a pullback. This pullback was only into an H4 demand that gave us another push. Then we reacted off of this daily right here, this daily supply right here, this previous contrary candle that you can see we touched right here, and then we got a pullback into another H4 demand. So right now we're anticipating price to keep pushing up from this area. So let's break this down on H4. So if we go to H4, check this out. We'll mark that exact area we're coming from the left. So if we look to the left, the previous contrary candle that created this push that's not touched would be this one right here, right? This one right here, and this right here. I'm going to delete it, but I'm marking it now so you guys could keep that in reference. But I'm going to delete it when we come to the right so you don't see so many lines. But notice how we respected this H4 demand that gave us this push. And then price got a reaction off this area. We have a left head and a right shoulder. So pretty much right here, we are like pushing out of this demand. We could see price probably keep going to the upside, but we'll break that down now. So keeping in mind that we're coming off this H4 demand, we'll just delete this. Now we go to H1, right? And we see what we're actually working with. So what we're working with is this right here. Notice how price right here. So this is the key right here, guys. Notice how on H1 right here, after touching this H4 demand, notice how price creates this H1 demand right here. So we can mark this H1 demand, H1, and it's in confluence with the low of day. This is where the push started from, right? This is already used. Price pulled back into this area and used it. So this is the true area of demand that's being formed off of the higher time frame demand. So this is a high probability area to continue the buys from. So keeping that in mind, we just look to the left. Notice how we have this supply right here on H1. So check this out, guys. Sorry, I'm not gonna lie, I have a sore throat and my nose is a little stuffy. So I apologize if I sound weird, but we got to do the concept for you guys. I promise you guys I will do this video. So here we are. Now check this out here, guys. This is the sauce right here. So we identified, this is literally what we're working with when we come to sit down. And this is the key. This is how I find direction, how I get my entries. So pay attention, guys. Notice how we're coming off this H1 supply, right? Price touches it exactly to the exact pip. And you can see we got this bearish move. Now this bearish move is pretty much filling this void right here. So this is the first target we have for price. This H1 demand right here in confluence with this previous high of day. This is the first target for price. But we know more than likely price is going to break this area because this is not where the push came from. So we'll probably get a rejection off this area, but this is the true area of demand that created the push. So we have this void to fill right here with this being the first main target of the day. And then now check this out, guys. We go to M15 because we need to fill that void. Now, if we go to 15, everything starts to clear up a little bit. If we go to 15 and we turn on the session-based indicators, this is the sauce right here, guys. So pay attention. Notice how on pre-New York, we have this M15 supply right here, right? M15 supply. But the sauce is this, that on M5, we have an M5 in confluence with that M15. This area right here. So we mark this M5 like this. And then this is even more sauce. We go to M1 and we have an M1 in confluence with that same M5 and M15. So we mark this M5, M15, M5, and M1. So we mark this right here. So we have these three time frames in confluence. We are pretty much, this is a solid area of supply to take a sell from, because this is from our previous session. We're trading New York. This is pre-New York. It's setting up New York, and we have these three time frames in confluence. We're pretty much coming off of this supply right here, off the H1. If I also just mark this like this, you can see how pretty much price formed this supply right here after touching this H1 supply, and then we respected this area, and then we created this new area of supply right here that's not touched. So this is the key right here, guys. We have this solid area to take a sell from. Sorry, excuse me about, I'm literally stuffed up. So this is the sauce right here. If you notice, NFP comes and pushes price, right? Pushes price to the downside, validating that we're filling the void. So price is pushing down, and this just validates this area of supply right here, because the push from this NFP is coming from this supply. So it's a strong push. So this is a very high probability area to take the sells from. We have this void right here to fill on H1 right here. And on top of that, we have our previous session setting us up with all those time frame confluences. So I sent I sent a sell limit, it didn't activate at first. So when price touched again in New York, I sent a market execution right here with these parameters right here, guys. So check this out. This is our main target down here. We're looking for an entry right here, right? So we just do like this, and then check this out. This fast forward right here. Okay, perfect. Right here, you can see that price literally taps our area, and then that's where the volume is coming in from. Literally, New York just pulls back into that area that pre-New York set up, and then you could see that the whole volume for the day is going to the downside. If we just fast forward a little bit more, let me fast forward. Okay, perfect. You can see that the actual target was hit. I didn't hold to all the way down there, but you could see that why I say that this is the target. We had this H1 void to be filled. And notice our previous session is setting us up. We're coming from a higher time frame supply. So this is how we tie in the market direction with our lower time frame entries. We could identify that the market needed to pull back into this area, first target, and we are having our previous session set us up. So this would have been our, this is literally our entry right here. And I actually called this in the signal group. Give me 1 second. Let me see pretty much how long I have this video for already. Okay, guys, so I'll wrap it up for this video. I hope you guys enjoyed this breakdown, and you guys could use this in your future reference. If you have a higher time frame supply that your session is touching, or higher time frame demand that your session is touching, keep in mind for price to form an area of supply or demand off that supply, or if it's a supply, or if it's a demand on a lower time frame. So a lower time frame supply or demand off of a higher time frame supply or demand, to use that as an entry confirmation in your session. What I'm saying is, for example, we're coming off this H1 supply, but we're not going to just enter here because we're coming off H1 supply. We have our session actually setting us up on a lower time frame to in confluence with a higher time frame supply. So I hope you guys enjoyed this video. Leave a like, comment, subscribe, and the next video is going to be a banger. I promise you guys the next video is literally sauce as well. The next video is going to be identifying areas of supply and demand that have been touched versus areas of supply and demand that haven't been touched. So like, comment, subscribe, and I'll see you guys in the next one. Peace.